Hi, today we're going to talk about the mortgage process, and we're going to talk about it basically on purchasing a house and closing within 30 days. Now, depending on your purchase agreement, it might take 30 days, it may take 45, 60. It's basically going to be written down on the purchase agreement how quickly you're going to get that loan done and you need to close. So, we're going to use basically how what I look at is I look at a loan as process as more like a horse racing track. And with this, you have a start and you go all the way around the track once and you end at a finish line. So let's kind of go through this process and we're going to try to get this done within 5 minutes or less. To start off, what happens here is that you had your loan pre-approved by a lender. This does not mean you're in actually starting the loan process yet. But once you do have a purchase agreement completely signed by all the parties, then that can begin. The lender will then create a set of disclosures, and those disclosures will be sent to you. And one of the major ones is called a loan estimate, and it documents the terms of the loan based off of what you want the terms to be. So it's really important on that you complete signing those disclosures within the first 24 hours. The sooner you get that done, the sooner the lender can send the whole package into underwriting. So let's say you got that done within the first 24 hours. Then the lender will go ahead and they'll send the loan package to underwriting. And then with that, they'll also order a copy of the appraisal. They'll also contact the title company and get a title report done. And then also what they'll do is they'll call your insurance company and get what they call an insurance quote for how much it's going to cost to insure the property. If you get that done, they'll get that all done immediately. And then hopefully by about day 5 or 6, and these are business days, you'll receive your conditional approval from the underwriter. Now, the conditional approval means that the underwriter likes the package, the loan package, and they think this is a great loan for them. So, but there might be some holes still to complete. So there's things that need to be done on it to make the whole loan complete. So basically from there, the next 15 days is getting all of those holes filled in. And that might be receiving a copy of the appraisal, getting the verifications for rent, your assets, maybe verification of employment, getting copies of deposits of funds that are coming into your accounts for closing, getting a copy of a gift letter, inspections that may be needed, getting those documented in there, getting the addendums maybe from the realtor, and then finally maybe the insurance binder too, which is a document basically from your insurance company says they're going to insure your house. Now the goal is to get all that done so it's there and ready on day 20. And at that point on, the lender is going to talk to you and say, hey, we're ready to send this in for final approval. Are there any changes to the loan that you want to make? And that might be including the term, the rate, the loan amount. So it's important for you to make those changes right then and there. Then once that's done, the lender will then turn that file back into underwriting for final approval. The underwriter is going to look at that within 24 to 48 hours. And if it's complete, they're going to issue final approval. But a lot of times there may be one or two items that need to be completed. Maybe there is a signature missing, or there's a paper missing, or a bad copy of something. So if the lender gets that information, they're going to contact you immediately, and you need to get on that and get that information back to them right away. The sooner that gets that done, the sooner the underwriter can sign off on your loan. Once your loan is signed off, then what will happen is the closer, she or he is usually the person that types up the loan documents to be sent to the title company. They will send out what they call a closing disclosure for you. The closing disclosure for you is basically a document that says here are your final interest rate, your final loan amount, your final term, whether or not it's 30 years or whatever. You're going to look at that and see if there's any final changes to make sure it's absolutely perfect. And once you said that's perfect, you'll sign that form. And then what will happen is the closing specialist will then talk to the title and escrow person, and they'll match their set of fees. So the title company will have a list of all their fees, and all the copies of the taxes and insurance and all that other stuff. And then the lender will send them a copy of all of their fees, and together they'll create one match set for you to sign at closing. Once that's done, the lender will then send their documents into the title company, and then you'll be scheduled by the title company to go in and sign your documents and bring in any money that you need to bring in. Now, if it's a purchase and after you've signed, purchase or a refinance of a rental property, a refinance of a second home, then that loan can fund the very next day after you've signed all your documents. If it's a refinance of a primary residence, there's something called a 3-day right of rescission, and you need to wait 3 days before they can fund it. That gives you the chance to back out of it if you need to at very last minute. So that's the whole process, and after 30 days, you're basically closed. So I hope you appreciate my video today. Thanks for watching, and we'll see you again. Bye now.